Deloitte's biannual CFO Sentiment Survey, which surveys 66 CFOs from ASX-listed companies, reveals a sharp 12 percentage point increase in optimism about the economy over the past 6 months. This marks the first time since 2022 that sentiment has recorded a positive reading. Overall, concerns about the Australian economy have slipped down to 5th place among the top fears of business leaders. A clear sign of economic turnaround. Instead of worrying about the economy itself, CFOs are now more focused on the challenges of executing strategies, retaining key talent, and navigating shifting government regulations. David Rumbens, partner at Deloitte Access Economics, said the latest survey results indicate that businesses are optimistic about the economy's trajectory into the new year. CFOs are clearly anticipating better times ahead, which is positive news. However, many of the risks they're dealing with won't vanish overnight and will continue to influence decision-making, he said. Rumbens noted that many CFOs believe Australia is entering a recovery phase, with attention turning more inward, focusing on internal execution and talent retention. Businesses are expecting the economy to slightly improve over the next 12 months, moving beyond a neutral point in terms of performance, he added. There's been a shift in mindset from an overwhelming concern about the economy to a more neutral stance. While it's not great, it's not as worrying as it was. Consumers have built up savings buffers, and that's starting to translate into extra spending. Businesses are starting to sense that there's more spending capacity in the economy. Optimism with caution. While CFOs are increasingly confident about the economy, they remain cautious due to the bumps that could arise along the way. Rumbens pointed out that recent national accounts data showed economic growth had slowed to just 0.8% for the 12 months ending in September. Australia's economy could grow at 2.2% rate next year. ANZ power competition between the US and China will continue, former Australian Trade Minister says. ASX market update. GDP growth slows. Rate cut odds tighten. December 4th, 2024. A significant factor holding back growth was increased spending on electricity and gas due to energy bill relief rebates, which shifted spending from households to government and national accounts. Despite this, households are generally spending less, and business investment remains subdued. On a per capita basis, GDP growth is down 0.3%. Treasurer Jim Chalmers acknowledged that economic growth had fallen short of market expectations, but insisted that government spending had helped protect the economy from a severe recession. The most encouraging aspect of today's national accounts is the growth in real incomes, said Chalmers. This reflects our progress in moderating inflation, strong wage growth, and the government's cost of living tax cuts. Stephen Gustafson, Deloitte partner and leader of the CFO program, said that while the survey results are encouraging, CFOs are far from feeling secure. Risk appetite is growing but remains historically low. While CFO sentiment has improved, 68% still feel neutral towards the economy, said Gustafson. This suggests that while there is cautious optimism, good times aren't guaranteed. CFOs have learned from recent experience how quickly economic conditions can shift, and a range of uncertainties are still weighing heavily on the year ahead. Join our channel now. Stay updated with the latest news and insights in business and finance. Hit subscribe and be part of our growing community.